Hi, this is the USDJPY 8-4 chart, and I'm looking at it on the weekend before the markets open on Monday 29th of April 2013. So right now the markets are closed, and we see exactly the picture of where they stopped. Now, for this particular setup, I'm using the EMIs, the exponential moving averages, of 5, 10, 15, and 65 periods. The yellow one is the 5 EMA, the magenta one is the 10 EMA, the Dodger blue one is the 15 EMA, and the white one is 65 EMA. And I am also using the MACD. You see the histogram. This is the zero line, and this blue line is the signal line. When the histogram is above zero line, it's bullish. When the histogram is below zero line, it's bearish. And we get certain signals from the combination of these elements. Let's see the big picture of the pair. Here we are at the monthly chart, and we see that we had the crossover of the 5, 10, and 15 EMAs, and then they were rearranged in proper bullish order, all of them below the price action, with the 5 EMA just below price, the 10 EMA below the 5 EMA, and the 15 EMA below the 10 EMA. The price jumped above 65 EMA at this point, and this is one of our triggers, of our entry triggers. So we could enter long here. Of course, this is the monthly chart that we are talking about. Huge price movements. We just see them here as small candlesticks, but they are candlesticks of hundreds of pips. And we could enter here just when the histogram of MACD started becoming bullish, and just before the signal line touches the histogram and starts running upwards inside it. We could enter here, and we could have put our stop below the 65 EMA at the half length of the biggest candlestick among the last 10. The last 10 are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the biggest of all is this one. So we would calculate how much is the half of it, and that would be the number of pips we would put our stop below 65 EMA as you would enter long here. But if our account did not allow that, and what's the rule? The rule is that our risk must not exceed 3% of our account equity. So if this amount of pips was going beyond 3% of our account equity, then we should jump to a smaller time frame. On the smaller time frame, which is the weekly one, we see that we have a clearly bullish trend. We see a huge bullish histogram that has been formed above a zero line. Somewhere here we could have entered early, just when price jumped above 65 EMA. You see that we had before that we had a crossover of the 5, 10, and 15 EMAs, and then they are all in proper bullish order. 5 just below price, 10 just below 5, and 15 just below 10. So we could have entered here. The price, the signal line of MACD was running upwards inside the histogram for all this time, and although it had corrections, the main trend is bullish. So could we enter here? Well, we don't know if the trend is going to last long or if we are going to have a correction, and it would be really risky to enter here in the case of a correction. It might not be huge, it might be double candlesticks, couple of candlesticks, but since we are talking about weekly candlesticks here, we shouldn't risk it. We should go to smaller time frame and try to find a point to enter where the price will make a small correction downwards. Then we jump there and jump on the train as the price resumes its uptrend. So if we go to the daily chart, maybe this is a good time to enter long because we just had a correction, but we should wait for the 5, 10 and 15 EMAs to have a crossover and start running upwards on a proper bullish order again, or we should see something here from the histogram. Now as we have a look at the daily chart, it doesn't help us find an entry point, so we will go down to the smaller time frame, which is the 4 hours time frame. And yes, here things are easier to manage, but we should wait. We should wait for what? We should wait for a candlestick to go and close above 65 EMA. We should wait to see a crossover and then the 3 EMAs in proper bullish order like they are here, in proper bullish order. We should wait for this bearish histogram to give its place to a bullish histogram. The histogram must start building up above 0 line, and as soon as we see a bullish histogram and the signal line is ready to start running like here, to start touching the histogram upwards, to start running inside it upwards, and while the price will be just above 65 EMA and the EMAs in proper bullish order, then we can enter. Where we'll put our stop below 65 EMA, and we must put it as many pips as half of the total range of the biggest of the last 10 candlesticks. So since we have to wait for, let's say, 2-3 candlesticks, depending on the gap we are going to have when the markets open, usually there is a gap, like this one here. I'm expecting to see a gap here. The price may jump somewhere here, and then we may have a couple of candlesticks before it goes above 65 EMA. So we should count 10 candlesticks. We should find the bigger one, the biggest, and then cut it in half and calculate the pips and put our stop loss as many pips as half of this candlestick below 65 EMA. If our account doesn't tolerate such a big risk, placing our stop so far away below 65 EMA, we can always go to smaller time frame using the same rules and searching for an appropriate entry point, minimizing our risk. Of course, minimizing our risk and going to smaller time frames, we expose ourselves to the noise of the markets, and with a minor fluctuation our stop may be hit, and this is not always the wiser thing to do. So this is how you should think about this pair. The pair is definitely in bullish in bullish trend. Try to jump as soon as it resumes its uptrend, to jump in. Thanks for watching.